Hey there, fellow financial enthusiasts. Welcome to the wacky world of finance. Strap yourselves in because we're in for a wild ride. You know the deal, the financial industry is always in flux. But this year, we're facing some seriously juicy policy issues that could have a massive impact on our lives and the world at large. I'm talking about everything from the rise of digital currencies to the constant state of economic instability and the pressure to fight climate change. It's all fair game, folks. We're rethinking how we invest our money and reconsidering the rules that keep financial institutions in check. So what are the biggest financial policy concerns, and how will they affect the direction of our economy? It's time to put on our thinking caps and figure it out. But don't worry, we're in this together. We'll explore the policies and trends that are poised to shape how we think about money and the institutions that prop up our modern world. It's going to be a wild and thought-provoking journey. Whether you're an investor, economist, or just someone who's curious about the forces that move our economy. So get ready for a roller coaster of a ride, folks. It's time to dig into the fascinating and ever-changing world of finance. Let's see what this year has in store for us. Climate change and sustainable finance. We need to talk about climate change, but not just from an environmental perspective. It's actually a ticking time bomb for global financial systems. Yep, you read that right. As we've seen with recent natural disasters like floods, hurricanes, droughts, and wildfires, the economic losses are staggering. And that's not even the worst part. It also creates a ripple effect on financial systems and contributes to instability. Yikes. But wait, there's more. Investments in fossil fuels and vulnerable infrastructure are becoming stranded assets because of the shift in demand for clean energy. Insurance premiums are going up like crazy, and extreme weather events are even impacting the creditworthiness of corporations and governments. It's a pretty scary situation to say the least. So what's the solution? Financial institutions need to step up and take action. They need to incorporate climate risk into their lending practices, invest in renewable energy initiatives, and expand sustainable investing. It's a race against time, and we can't afford to wait any longer. The bottom line is this: the future of the economy depends on addressing climate change right now. So let's roll up our sleeves and get to work. Sustainable finance initiatives. The immediate requirement to address climate change and environmental degradation has led to an unsustainable economic model, requiring immediate action towards a sustainable future. Sustainable finance initiatives prioritize ESG, environmental, social, and governance considerations in financial decision-making, supporting long-term economic growth while preserving the environment and advancing social progress. From green bonds to ESG investing, governments and regulators recognize the importance of sustainable finance in building a more robust and sustainable global economy. Don't miss the wave of sustainable finance initiatives gaining momentum worldwide. Green bonds. One class of fixed income instruments is green bonds that raises funds for projects with positive environmental impacts. These projects can include renewable energy, energy efficiency, and clean transportation infrastructure. The popularity of green bonds has soared in recent years, with issuances surpassing $250 billion in 2020. The appeal of green bonds lies in their ability to align investment with sustainability goals while providing investors with financial returns. Carbon pricing. On the other hand, carbon pricing involves placing a price on carbon emissions to encourage companies to reduce their carbon footprint. Companies are incentivized to invest in cleaner technologies and reduce their greenhouse gas emissions by placing a price on carbon. Carbon pricing can take many forms, such as tax or cap-and-trade systems. It's gained support from both governments and businesses as a way to combat climate change. ESG investing. ESG investing involves considering environmental, social, and governance factors when making investment decisions. ESG criteria include a company's carbon emissions, labor practices, diversity and inclusion policies, and board composition. By incorporating ESG criteria, investors can identify companies that are better positioned to manage risks and create long-term value. These sustainable finance initiatives are just a few examples of how the financial industry is adapting to a changing world. As investors increasingly demand sustainable investment options, financial institutions are stepping up, creating new products and strategies prioritizing sustainability. It's possible to make progress toward a more stable and resilient future by embracing sustainable finance initiatives such as green bonds, carbon pricing, and ESG investing. Digital transformation and Fintech. To benefit from the possibilities offered by the ever-evolving digital landscape and fuel efficiency, innovation, and growth, businesses must undergo a process known as digital transformation. However, Fintech describes the innovative use of technology to create new and improved financial services that challenge traditional methods, disrupting the financial industry and giving consumers more agency and convenience in their financial lives. Let me tell you about how Fintech is transforming traditional banking services. The days of waiting in a bank queue are long gone. Fintech has disrupted traditional banking, bringing cutting-edge technology to the world of finance. With digital wallets, mobile banking, and peer-to-peer lending platforms, managing your finances has never been easier or more convenient. This innovation has forced traditional banks to adapt or become obsolete, leading to increased competition and a rapid financial industry transformation. The future of banking is digital, and Fintech is leading the charge. Digital transformation and Fintech are rapidly transforming industries worldwide, but they face challenges finding the right balance between innovation and consumer protection. The use of data and algorithms in Fintech services requires clear rules to protect privacy and security, and the lack of a consistent regulatory framework across jurisdictions creates a complex environment. In addition, the pace of technological change requires constant regulatory review and updating. Clear and consistent regulatory frameworks must be developed to ensure innovation and growth while safeguarding stakeholders' interests. And regulators must keep pace with technological advancements, financial stability, and systemic risk. Another consideration is financial stability and systemic risk. Financial stability refers to a state of the financial system where it can effectively perform its primary functions of intermediating between savers and borrowers, allocating capital, and facilitating economic growth without experiencing excessive volatility or disruption. In a financially stable system, all participants, individuals, businesses, and financial institutions, can have confidence in the system's ability to function smoothly and sustainably over time. Systemic risk, on the other hand, refers to the risk of a widespread disruption or breakdown in the financial system that could have significant negative impacts on the economy as a whole. This risk arises when the failure of one participant or group of participants in the system can lead to a domino effect, causing a ripple effect throughout the system. Here's the importance of financial regulation and supervision. Financial regulation and supervision are crucial for maintaining stable financial markets and protecting consumers from fraud and misconduct. They help prevent the widespread failure of financial institutions, promote transparency and fairness, and encourage healthy competition and innovation. Without them, the risk of financial instability would be much higher, with potentially severe consequences for the global economy. The financial system's safety and stability are critical to the economy's health. To ensure this, there are three key issues that regulators monitor: bank capital requirements, stress testing, and resolution planning. Bank capital requirements are the amount of money banks are required to hold in reserve to cover potential losses. Stress testing simulates various scenarios to identify weaknesses in banks' balance sheets. Resolution planning ensures that banks have a plan to orderly conclude their business operations in case of failure. These issues may sound technical and dry, but they're fascinating and essential to the health of our financial system. Globalization and international financial regulation. Finally, in this video, we'll consider globalization and international financial regulation. The world's financial systems have become more interconnected in recent decades due to technological advancements, global economic growth, and financial liberalization. This has brought benefits like increased efficiency and innovation, and new risks and challenges like the rapid spread of financial crises. The trend is likely to continue, reflecting the ongoing evolution of the global economy. Global finance policy. Global finance policy issues have become increasingly important in today's interconnected world, as economic decisions made in one country can have far-reaching consequences for others. With the rise of globalization, financial markets have become more integrated, and the impact of policy decisions can be felt across borders. As such, policymakers worldwide face numerous challenges in managing the global economy, from balancing economic growth with financial stability to addressing income inequality and climate change. These complex issues require innovative solutions and a coordinated global effort to ensure that the benefits of economic growth are shared equitably across societies. In this context, exploring and understanding the key global finance policy issues has become critical for businesses, policymakers, and citizens. Do you know that cross-border payments, digital currencies, and stable financial markets shape the global economy? Although the adoption of digital currencies holds the potential to revolutionize international payments, doing so may present difficulties for the financial stability of developing markets. When realizing digital currency's full potential, policymakers must find a middle ground between encouraging innovation and preserving stability. Implementing these technologies could result in cost savings, improved access to financial services, and increased competitiveness for emerging markets in the global marketplace. So buckle up, folks, because the financial industry is going to be one wild ride. We're talking about some serious policy issues that are going to have a massive impact on our lives and the world around us. We've got digital currencies popping up left and right, a global economy that's about as stable as a Jenga tower, and an urgent need to combat climate change. It's enough to make your head spin. But fear not, my friends. Sustainable finance initiatives are here to save the day. We're talking about things like green bonds, carbon pricing, and ESG investing, which prioritize factors like the environment, social responsibility, and good governance in financial decision-making. Who says finance can't be socially responsible, right? And speaking of change, digital transformation and Fintech are totally shaking things up in the banking world. It's a digital revolution, baby. But with all this new technology comes the need for consistent regulations across jurisdictions to protect our privacy and security. Digital banking is the future, and Fintech is leading the way. At the end of the day, financial stability is essential for a healthy economy, and that's where policymakers come in. By working together, they can mitigate risks, protect consumers, support growth, and maintain global stability. It's kind of a big deal considering the consequences of financial instability can be pretty severe. So let's hope they put on their thinking caps and collaborate to promote a stable and prosperous economy. Thanks for watching our video. If you find this YouTube video interesting and you want to see more, please leave us a like and subscribe for more videos like this one. Click the bell icon below to be notified periodically or whenever we upload one. Thanks for tuning in, and we'll see you in the following video.